The world is accelerating into the digital economy. We're going to help you stay ahead with the latest in Web3, crypto, and data. Welcome to Forkast IQ. I'm Forkast's editor-in-chief, Angie Lau. It's great to be with you. Let's start off with some pretty big news coming out of Hong Kong this week, and the broader implications could be industry-wide in the city and maybe across the Asia Pacific. Crypto exchange platform JPEX is under fire, accused of fraud by the city's authorities. Thousands of complaints have been pouring into the Hong Kong police in what could be one of the biggest financial scandals ever seen in the city. Forkast's Jeff Chung takes a closer look at what's been happening.
1.2 billion Hong Kong dollars. That's over 150 million US dollars. That's no pocket change for sure. It's what over 1,600 investors have at risk in crypto exchange JPEX, making this the largest single financial fraud case in Hong Kong's history. Problems with crypto platform JPEX came to light last week when Hong Kong's regulator, the Securities and Futures Commission, notified the public that it had received over 1,000 complaints about the unlicensed crypto exchange. The platform reportedly hiked withdrawal fees to almost $1,000 US to discourage users from withdrawing assets after the SFC rang the warning bell. Community members who attended Token 2049 in Singapore last week also reported finding JPEX's booth eerily abandoned after the SFC warning. Meeting the press Monday morning, Hong Kong's chief executive John Lee Ka-chiu took the opportunity to stand behind the current regulatory framework.
The incident regarding JPEX actually reflects the necessity for proper regulatory system for virtual assets trading.
Hong Kong introduced a new licensing regime for virtual asset trading providers at the beginning of June this year, which gave operations that had a meaningful and substantial presence before then a 1-year transition period to either apply for a license or close down. The SFC said in a statement that the platform had been operating in the region without a license. At a joint press conference between the police and the SFC, Elizabeth Wong of the SFC's FinTech unit said that JPEX had been partnering with influencers and over-the-counter services to promote itself as a licensed platform whilst operating in the territory without applying for a license. The joint SFC police operation, codenamed Iron Gate, has led to the arrest of 8 people aged 22 to 52, including 2 social media influencers over allegations of conspiracy to defraud.
We have only seen that people that have endorsed on the platform who have actually been arrested. This is a very interesting facet because at the end of the day, it was actually discovered that JPEX is not actually a platform that was operating within the confines of Hong Kong at all, and is in fact doesn't even have any presence within the jurisdiction.
JPEX looks to be on the counter-offensive, however. In a statement, the exchange claimed that third-party market makers had, quote, maliciously frozen JPEX funds, and that, quote, unfair treatment by institutions in Hong Kong towards the exchange had led to operational difficulties. The statement included a promise to, quote, recover liquidity from third-party market makers as soon as possible and gradually adjust the withdrawal fees back to normal levels. However, for victims, getting their assets back from JPEX could prove to be a challenge.
So a lot of people have this misconception that they thought they report a matter to the police, they can just sit back and do nothing. That's not true. The victims still have to hire their own lawyers and apply through the court process to obtain a court order, a garnishee order in most cases, to release the funds back, restore it back to the victims. We know that there's thousands of people reporting to the Hong Kong police. Have they done so in the relevant jurisdiction, meaning Australia and Dubai? That's a question mark.
As authorities continue their investigation into the JPEX saga, it is becoming clear that regulation alone may not be enough.
Regulation is not going to function as an insurance policy at the end of the day. So it goes back to the circular loop of end users themselves have to have their own due diligence. They have to have their own education, and it's a whole mixed bag. It's not just educating the public, it's also educating the professionals.
What is also very important is investors understand very well the operational mode and the risk involved. And most importantly, only invest on platforms that are regulated by SFC.
For Forkast, I'm Jeff Chung, Hong Kong.
This is a story that's still unfolding, but let's get in former SFC regulator Angelina Kwan to talk about how this came to pass and what lies ahead. She's helped mold Hong Kong's early automated trading services regulations and is currently the CEO of Stratford Finance. Angelina, it is really good to see you. So let's talk about this. JPEX has been on the SFC's investor alert list since July 2022. Do you think it's possible that the regulator ignored some red flags here? Could they have done anything differently?
So there is a fine line in terms of what the SFC can and should do. On one side, if they didn't observe for a period of time and just came in with all full guns blazing, then as a regulator, they could be criticized as being too heavy-handed. JPEX actually stipulated that said, we are regulated. They said we are applying for the SFC licenses. That's a blatant lie.
Yeah, Hong Kong regulators are showing they are serious about VATP licensing provisions and punishing bad actors. Do you see more enforcement actions against exchanges in Hong Kong?
I definitely see there will be enforcement actions because just as the sun rises and the sun sets, and one of the reasons why Hong Kong is back is because of the fact that Hong Kong came up with a very helpful and positive regime that is good for digital assets and Web3 for the future. So we've basically sold our future to doing this and doing this right.
You know, considering JPEX has Australian origins and was supposedly headquartered in Dubai, how do you think this is going to impact the platform's accountability? Is there any knowledge sharing agreement here between different jurisdictions for fraud prevention? What's your legal take on this?
VARA, which is the Virtual Asset Regulatory Authority in Dubai, has just worked out an MOU with the SFC. Digital assets and Web3 are borderless, and it's going to be very important for each regulator. If they're seeing something in their country, then they're going to have to definitely talk about it and escalate this quickly. In the case of JPEX, they lied. They were not regulated in Dubai. I don't think they've put in a license. And they were banking on the fact that retail investors wouldn't check this.
So do you think the investors will get their assets back, and what will the recovery process look like?
So the police and probably Commercial Crimes Bureau will have to work together to search for assets, freeze them, and then liquidators will probably be appointed, and investigations will occur. And then the whole process of returning assets will have to happen, and that's going to be the time-consuming part. And that's why it's very important for investors, if you're going to get into any investing, know who you're investing with. Invest with a licensed entity. I'm very glad that 1.2 billion is the largest amount Hong Kong has had. You've seen what happened with FTX. They were not regulated in Hong Kong. They were regulated in the Bahamas. And it's been very difficult for investors in Hong Kong to actually collect on their assets that are in the Bahamas or in FTX. That's why regulation is so important for the digital asset industry to grow and to survive. We are now the regulatory sandbox for Hong Kong and for China, as well as globally in Asia Pacific.
Got it. All right, Angelina, hey, thank you so much for joining us. Always a pleasure to see you, and thanks for your insights here. All right, from Hong Kong to the US then, and the case that triggered the tsunami for Web3 last year, the FTX fiasco. And now we're getting to the circle around founder and former CEO Sam Bankman-Fried, specifically his parents, now at the center of the next chapter of the scandal. On Monday, lawyers representing the bankruptcy estate of the failed exchange alleged that Alan Joseph Bankman and his wife Barbara Fried, both tenured professors at Stanford University, exploited their access and influence within the FTX enterprise to enrich themselves directly and indirectly by millions of dollars. Now, according to the complaint, SBF's parents extracted significant unearned rewards from their involvement in FTX Group, including a $10 million US cash gift and a $16 million luxury property in the Bahamas. Now, in their defense, the legal counsel for Bankman and Fried told CNBC that the claims are completely false. All right, staying with the U.S., the U.S. Securities and Exchange Commission will expand its regulatory enforcement beyond Coinbase and Binance US onto other cryptocurrency exchanges, intermediaries, and decentralized finance entities. That's according to the agency's head of crypto assets and cyber unit, David Hirsch. Hirsch added that adding a DeFi label to an operation will not help circumvent the SEC's enforcement here. Now, regulatory action against bagged actors is clearly taking center stage, but what does it mean for industry players and, more importantly, the common man? So how will this impact markets? Of course, that's top of mind for everyone. We asked James Quinn of Q9 Capital. James, welcome to the show. Let's get straight to it.
Thank you for having me.
And I want to ask you about this. This is a signal here. Alibaba's Ant Group is retreating from its $100 million crypto fund, and some say it's diverting investments to AI. Is there a shift in the broader crypto venture funding landscape? What's your view?
Funding is more difficult now, and certainly it was, 18 months ago, if you will. So that's, no doubt about that. Now, I have actually read some data recently, and actually, in some ways, AI funding is down from where it was recently as well.
All right, let's talk about the macro story here. The Fed is keeping rates unchanged in the U.S. What does it mean for crypto markets?
You've seen the volatility in Bitcoin lately, with the exception of a brief downturn a few days ago. It's been relatively low. So I think the market just simply isn't reacting to the rate news. I think largely the rate news, especially out of the Fed, because it has been purposefully so telegraphed, is a bit of a yawn.
Yeah, and staying on Bitcoin, the New York State Department posted new, tougher guidelines on listing cryptocurrencies. And out of a lot of previously listed cryptos, only Bitcoin, Ether, and 6 stablecoins made it to the list. The largest cryptocurrency by market cap's dominance has risen to 50%. Could Bitcoin potentially go higher here?
It's pretty obvious that Bitcoin has come out a winner in this downturn. It's partially because altcoins and a lot of coins that are not compliant, never really had a business plan, weren't really going anywhere, and were part of speculation, are really out of favor right now. Bitcoin is actually clear for the most part in most regimes of regulation, considered a commodity or considered in some way that companies feel quite comfortable to offer Bitcoin-based products.
I want to ask you about Ether here. It dropped to a 14-month low against Bitcoin as token holders, including Vitalik Buterin, sell to exchanges. What's your outlook on Ethereum, second to Bitcoin? What's your take?
Ethereum continues to develop. Just was at a conference recently, and Ethereum was featured there. A lot more continues to be built on it. And as I mentioned previously, it's also a layer 1 and a coin which has gotten regulatory approval and continues to get regulatory approval in certain jurisdictions, which I think this is extremely important.
And last question here, and this one's on stablecoins. PayPal's first report on its stablecoin suggests slow adoption. The market cap of stablecoins is on a decline since the Terra Luna blowup. What's your outlook?
Stablecoins, the outlook's very positive. I mean, stablecoins have a lot of use cases. They make transfer easier. You can see with the different stablecoins that are offered, you can have extremely compliant versions of stablecoins. I think you'll see more liquid stablecoins across different currencies in addition to US dollar. I think the way that they can meld into the banking system potentially is really positive.
All right, James, thanks for joining and sharing your insights. Appreciate it a lot.
Thanks a lot. It's always great to be here. Thank you.
All right, time for a quick break, but we are going to check in on the NFT markets when we come back. Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
welcome back to the show. You're watching Forkast IQ. I'm your host, Angie Lau. All right, yet another major global bank is testing real-world use case for tokens and smart contracts. Citi Token Services were announced earlier this week, which will tokenize deposits so they can be sent anywhere in the world in an instant. This service is geared towards Citigroup's institutional clients, providing cross-border payments and liquidity 24/7. And talking about tokenization, let's also get in our very own Yehudah Petshcer to talk about the world of non-fungible tokens, or of course, we're talking about NFTs here. All right, what have you got for us this week, Yehudah?
Yeah, let's get right into the NFT markets, and we'll start with the Forkast 500 NFT index, which is down quite extensively this week. Those losses reflecting the ever-declining sales volume, the lower prices in NFTs across collections, and all because the sentiment in NFTs has maybe never been lower. In total, we saw just over $62 million in total global sales and unique buyers, sellers, transactions, all hanging around that previous week's levels as well. We did see a rather large CryptoPunk sale, with Punk 3609 selling for over $682,000. This is one of those rare zombie CryptoPunks, which might sound familiar. Now, the big news last week, we saw the SEC escalating their war on NFTs, charging now the second NFT project. This was Mila Kunis and Ashton Kutcher's Stoner Cats. The Stoner Cats were one of the very first NFT projects to make good on the idea. What's interesting in this collection is that the backing or the participation from so many iconic names, so many Hollywood stars, again, Mila Kunis, Ashton Kutcher, but even Chris Rock, Dax Shepard, Jane Fonda, and Seth MacFarlane. Hey, even Vitalik Buterin was on this show. Well, that gave collectors some type of confidence that this project was properly vetted and that there really was a fundamental shift in how things could be done. Ultimately, though, the Stoner Cats team was charged with selling unregistered securities, just like Impact Theory was last month. And they also agreed to pay that $1 million fine, provide refunds, burn any NFTs in their possession, and remove royalties to the tokens, but they did not have to admit to any guilt of selling unregistered securities. What stood out to me, though, in these charges was the SEC zeroing in on the fundraising aspect of Stoner Cats, which applies to almost every project in the NFT ecosystem. Also, the fact that the team would be earning money from royalties. Now, we had more big news from the Bitcoin side of the NFT ecosystem. Animoca Brands, basically the father of the NFT space, they're known as the backers behind some of Web3's biggest projects and companies, including Yuga Labs' Other Side, their own Mochaverse, Rec League, even CryptoSlam, and Forkast.News. Well, for the first time, Animoca is now branching out their metaverse ambitions onto Bitcoin. Animoca brand subsidiary, Darewise Entertainment, is set to launch their first metaverse ecosystem token on Bitcoin. This will take place with the help of Horizon Labs. Their plans are to power a full ecosystem for gaming, for brands, for IRL experiences, and this will start with a game called Life Beyond, which will be the first metaverse on Bitcoin to use their upcoming metaverse token. And let's stay in the world of gaming because this has been a really hot time for games on the blockchain. Rec League kicked off their debut tournament last week, while Yuga Labs' Heavy Metal Forge opened a new phase for its players called The Rift. Zynga also minted their first ever NFT for an upcoming game called Sugartown. And last week, we also learned that both Konami and Krafton, who are the devs behind the infamous PUBG game, are both launching NFT-backed games. Konami is an icon in the gaming industry, and they're bringing a game called Project Zircon, and Krafton's game called Overdare promises a Roblox-style open-world sandbox game that should reach millions of gamers given the success of PUBG. They're also launching their own blockchain called Settlus for this game to live on. So it's becoming clear we're at a very special time for NFT gaming. Back to you.
Yehudah, always good to get your take on things. Appreciate it a lot. All right, on that note, let's take a quick break, and we're going to get you all the action from the Philippines Blockchain Week on the other side. Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast.News.
Welcome back to Forkast IQ. Well, where has the time gone? September has been jam-packed with blockchain events across Asia. And this week, it was time for the Pearl of the Orient to shine bright. I'm talking about the Philippines here, where the second edition of the Philippine Blockchain Week brought together local and international industry leaders to discuss the adoption of the technology. Well, we covered it last year, and we're going to do this again this year. And we sent Forkast's Jenny Ortiz to cover the highlights on the ground in Manila. Here's what she found.
Metaverse, non-fungible token, cryptocurrency, Web3, blockchain, you name it, and it's here at the Philippine Blockchain Week. This year's theme is Breakout, and organizers say this is because now is the time for blockchain technology to break free in the country. The week-long event kick-started with the country's first-ever Metaverse Fashion Gala, featuring the designs of world-renowned Filipino fashion designer Michael Cinco. Importantly, it wasn't just the industry players. Philippine government officials were a big part of the program too. In his speech, Philippine Senator Robin Padilla shared how blockchain can be utilized to support President Bongbong Marcos's call for full digitalization in the country.
Blockchain will definitely help small businesses. So again, I'm here to support blockchain. I'm here to whatever you like me to do. To sponsor a bill for you, I'll do it.
Speaking of laws, the Philippines has Republic Act No. 11453, which gives the authority of the Freeport area of Bataan the power to facilitate generous fiscal incentives for blockchain technology companies. As for crypto regulation, the Philippine Securities and Exchange Commission told Forkast it's expected to be released before the end of the year or the first half of 2024. The agency has pushed back the issuance of a framework earlier this year due to the collapse of FTX in late 2022.
The goal remains the same. We will have it out for public comment in the next month or so. And then from there, we will see about implementation, whether at the end of the year or Q1 next year, or maybe Q2, depending on feedback on the public.
For blockchain firms, the government support for the technology is welcome news.
They're very keen on really finding out how technologies like blockchain would essentially make things more efficient for these current processes that we already have.
As a developing country, as a growing country, I think that's where Philippines will make a difference. It gives us a level playing field because blockchain is data of integrity. People coming into these conferences, learning, coming together, that's a community, including the government. It's not us or them, because it's one community.
For foreign investors, the existing law in the country is a reason to expand here.
So it is hard to push our business in Korea. So we are looking for the possible way for the globalization. So we decided to come here in the Philippines. Why? Philippines has the blockchain law. That's why we are now processing the business license through the APAC.
Artificial intelligence, or AI, was the other big topic of discussion as industry players explore the potential and pitfalls of this technology that's taken the world by storm.
Like with any new technologies, there's always going to be risks. It's not just AI. It could be the mobile phone. It could be any system that we have. It can be used for good and it can be used for bad. And the way we can curb it is as a society come together and decide why and how do we want to exist as an ecosystem? What checks and balances should we put in place? And when it comes to ethics and the use of ethics, that's a huge, minefield. It requires collaboration.
Meanwhile, digital payments have seen an exponential growth in the Philippines in a post-COVID world. According to the country's central bank, over 40% of retail payments in 2022 were in the digital form. The shift to the digital economy is no surprise. This is because the Philippines remains among the top internet users worldwide, with over 85 million people, or 73% of the population, use the technology. With this, blockchain technology is bringing a lot of use cases in the field of finance. One of that is the Digital Know Your Customer, or EKYC. As for concerns about security, blockchain also has the answer for that.
The thing about security is, if you have one key that protects all of the KYC data, you'd be in trouble because then someone has to just break that one key and then now we have a massive data breach. But the way that we do it is special because we actually don't have a single key to protect it. Each of those records is protected by the individual's key.
While the country fell to 6th place in the recent Global Crypto Adoption Index of Chainalysis, local industry leaders are not seeing this as a cause for concern.
It only tells us the number of people really owning assets, no? But it doesn't show the bigger picture. The bigger picture being that we are adopting the technology in other ways, and we're seeing even more adoption in different areas beyond cryptocurrency and beyond what we normally see as Web3 adopters. No?
As thousands of people throng to the Philippine Blockchain Week, one thing is clear: the future of crypto adoption lies with Asia. In Manila, Philippines, Jenny Ortiz, Forkast.
Well, that's a wrap on this week's show. Thanks for tuning in. Always appreciate it. And it's great spending time with you, as always. And it would be great, always, for your support. Remember to like and subscribe to this video if you're watching us online, or stay tuned right here on this channel if you're watching from home or your office, wherever you are. I'm Forkast Editor-in-Chief and your host, Angie Lau. Always good to be with you. Join us again this time next week as we bring you the latest from the world of Web3 and why it all matters. Forkast IQ, get intelligent in Web3.